Hello, everyone. Okay, so we'll get started in like 30 seconds. Just waiting here for my stream to catch up. Let me just see. There we go. Yeah, YouTube's a bit slow. I'm not sure why. I'm dropping a few frames. Okay. I'm just trying to make sure that people can hear me. Okay, so yeah, the YouTube built-in delay of about 30 seconds is closer to almost a whole minute today, or right now. I'm not sure why. But anyway, so we'll go with that. So, hello everybody. This is obviously this year's final live stream since it's a new year, so happy new year in advance. So let's talk about the best time to invest in 2020 and really going forward. There we go. So you probably have seen or heard about this particular quote here in various places. So the best time to invest was yesterday. The next best time is today. Now this might sound slightly annoying to some. It might sound quite deep to others, but that's true, right? Over time, 73.1% of the time, the market. So 73.1% of the time, the market ends up making money, right? So on December 31st, the market 73.1% of the time is higher than it started the year off of. So as a result, being positive, being optimistic about the market, especially if you're properly diversified, makes sense. And that's also why most analysts tend to usually be relatively optimistic when it comes to the market. And let's face it, a lot of the massive downturns, when they do happen, they do come more or less out of nowhere for most people. Although, again, hindsight, you can actually look at it and you say, well, people should have been able to forecast this, that, and the other. So anyway, so what does this have to do with your investing? Well, it actually turns out it has to do quite a lot of it. So here are a few predictions that have been coming out over the last few days, hours, months in certain cases. So market crash 2021, protect your cash with these two safe stocks. So this is from the Monthly Fool. This is the first link in the description down below for you as well. So here they're talking about how the market has been basically on a rump in 2020, and it's likely going to have some corrections or some pullback. And as a result, they're recommending these handful of stocks. So once you actually bother reading the article itself, it doesn't really talk about a crash per se, other than there might be a sell-off for a short period of time. The main thing they're talking about is the sell-off that already happened in 2020. So it's more of a clickbaity title more than anything else. Now this here, Warren Buffett, get ready for a 2021 market crash. And I mean, yes, they quote him that, he remarked that, buy a stock the way you would buy a house, understand and like it such that you'd be content to own it in the absence of any market. In other words, regardless of what happens in the market, whenever, the key is to select the correct investment that matches your risk tolerance, and that you understand what you're investing in, that you're happy with what you've invested in. And as a result, even if the market goes down, you're not going to be tempted or, panicking to sell at that point in time. So again, this is another of those clickbaity titles, because that's not what, that Warren Buffett hasn't said that there's going to be a 2021 market crash, as far as I know. It definitely doesn't, they don't quote him as saying that here, right? They're just giving an example of, if you're investing in Canadian Pacific Rail, that would be a stock that Warren Buffett would invest in. And as a matter of fact, to some extent, he has invested into via Berkshire Hathaway over the years. So again, a lot of these tend to be clickbait titles. And again, this one comes from the Monthly Fool, but published. This is published on their main website, and that one was published on Yahoo Finance initially. So the point I'm trying to make here is a lot of these clickbaity titles, whether they're positive or negative. And sometimes from the exact same people, they tend to usually be to scare you and to make you buy something. Like in this instance, they were just talking about general market psychology, if you will. But there are many, many, many instances and examples when they're going to be using more specific stocks, right? So in this case, they were recommending these two stocks over here, and in another case, they're recommending something else. Now, the really interesting thing is this is from published on MSN, but if you click, so again, this is the third link, but if you click on it, you will actually see that this is again from the Motley Fool for a third time. They're using even the exact same stock, the exact same image, but whatever, that's not a big deal. But the main point is here they were forecasting, they were saying, oh, there's going to be a market crash in 2021. This was published on June 24th of this year, right? So yeah, there might be some pullback in 2021. There usually is at least once a year. You get about a 10% pullback. That's pretty much normal, right? So there's no point in freaking out about any of this. But people do. And that's the problem with these articles. A lot of times, the main gotcha moment is the heading. Once you actually bother reading the article, they're saying, well, yeah, there might be a slight pullback or, prepare for a market crash. In this case, they actually have a subsection. But at the same time, and they're quoting, the CEO of Air Canada back in June saying that they're going to be hitting hard times. Yeah, no kidding. Airlines are going to be hitting hard times, right? I've been saying this, and many people have been saying this since March happened, right? It's obvious the airline industry is going to have a hard time for not just this year, not just in 2020 or 2021, but probably for a couple of years after that to recover to pre-pandemic levels of activity, right? So that's not really that surprising. But again, the problem when you see more and more of these articles is that you're going to be tempted to act out of emotion instead of rationally when it comes to investing. So now if you were to actually plot, these are 1, 2, 3, 4. These are nine different ETFs. So these ETFs, all of them are trading on the Toronto Stock Exchange, as you can tell. So this one tracks the S&P 500. This one tracks the Nasdaq. This is the TSX. These are Canadian preferred shares. This is the Canadian IT sector or technology sector. This is one of the largest, if not the largest, real estate investment trust in Canada. XEG tracks oil, so Canadian oil producers. VDU tracks international markets with the exception of the US. And then VAB is a large bond ETF, right? So that's literally since they were forecasting that 2021 is going to be a bad year, going to have a massive crash, you have to prepare. Okay, it's been 6 months, right? Since then, these are the returns. So pretty much everything is positive with the exception of bonds, which is at minus 0.08%, which is normal for bonds to really significantly outperform stocks when stocks are crashing and significantly underperform stocks when stocks are going through the roof, as they have been in many sectors. As you can clearly see here, right? The Nasdaq has gone up by 25.2% since June. And then if you were to roll it back to the lows of March, the Nasdaq has gone up by like 80% or thereabouts. So clearly, you should be investing and having a strategy, a long-term strategy that works for you. Some people, that strategy might include some cryptocurrency, 5, 10, whatever percent of your portfolio, because you're okay with the risk. You understand that it's highly speculative and you're fine with that. And for that person, sure. Other people, a balanced and diversified portfolio that is, or maybe even on the conservative side of that balanced diversified portfolio is the optimal thing for themselves, right? So it's really important to understand where do you stand? How much risk are you personally willing to tolerate? And now, obviously, if you're going to actually look and kind of try to break this information down and look at the analytics and do a bit of, trying to figure out the valuation of the companies, are they really overvalued, undervalued, how likely are they going to correct, et cetera, et cetera, et cetera. Now, in any given year, that would make a lot of sense. These days, the gigantic elephant in the room is obviously COVID, right? So Depending on how the pandemic progresses, depending on how effective or ineffective vaccines are for the long term, and then depending on how quickly people can actually get them and people are willing to take them, that will have a drastic impact on how quickly things recover, how many sectors of the economy will be able to reopen. Because as long as we're under lockdown, good luck to the airline industry to recover. As long as people aren't vaccinated or don't have proper procedures set up, good luck, trying to travel internationally without massive hassles and a lot of restriction put in place by the various nations that you're trying to travel into. Now, when it comes to, again, I'm not trying to say valuations are meaningless, but because of that massive elephant in the room, you have to take those valuations with a gigantic grain of salt. But let's have a look at valuations nonetheless. So this is the next link, link number 5 at this point in the description down below. So this looks at the Standard & Poor price to earning ratio. So they're looking how expensive is something relative to how much those particular companies are earning. And here again, they're looking at the S&P 500. So that's roughly the 500 largest companies in the US. The reason I say roughly is because, again, new companies get added and old companies get removed from this on an ongoing basis. And sometimes there's slightly fewer and sometimes there's slightly more than 500 companies in it. Anyway, so the main take-home point here is, right now, we're pretty much, with other than the ridiculous spike that we've had right before the financial crisis and to some extent during the financial crisis that happened here in terms of price to earnings ratio. Sorry, I'm still finding that cold. This is kind of the third highest peak in history. And then obviously here you had the dot-com bubble that happened over there, and then 9/11 that happened right there. So clearly, from this metric, when you're using this metric, you could argue that some companies are most certainly overvalued. And to some extent, I'll be addressing this next Thursday, so on January 7th, when I'll be talking about whether you should be investing and who it might be right for to invest in electric car manufacturers such as Tesla or other ones. So yeah, it is relatively overvalued. But as I said, not that this is it's not that this doesn't matter at all. It's just that there are many other issues right now that will also impact valuations on top of this and will impact how companies will be doing on top of valuations. But yes, this is definitely something to keep in mind. Now, that being said, and this is, by the way, this is the next link. So this is link number 6, I believe. So this is the founder of Ark Invest. So she talks about how she foresees, and in case you hadn't seen Ark, this is the, they have a bunch of ETFs, but this is one of the ones that tracks innovation. And specifically, if you're looking at year to date, right, it went up by 148.4% roughly, right, in a year. That's ridiculously high for an ETF. So obviously, she's still very bullish on it and says that they foresee roughly a 20% return, even going forward in 2021. Basically, it's safe to invest, according to her. But obviously, she has a significant vested interest in the company itself, being its founder and CEO. Now, she brings up some interesting points against a half an hour video from Bloomberg. The link is down below. Watch it, skim through it, and draw your own conclusions. And then obviously you have other people. So here, this is the editor from Newsweek. And he's kind of summarizing the forecasts. Like earlier this month, he was 10 days ago, he was summarizing the forecasts from various large banks, so JPM, etc., and what they predicting, and various analysts what they're predicting for 2021. And the vast majority of them are saying that 2021 is going to be a positive year. But now, keep in mind, one of the main reasons they're saying that is because 73.1% of the time the market goes up, right? So if you are an analyst, even if you had any doubts that 2021 is going to be a good year, going against the grain, being the one guy that or woman that stands out there and says, you know what? No, the market is going to go down next year. That's very, very dangerous to your career if you're the only person that is wrong. Whereas if you're one of the n number of people that are wrong, well, at least you went with everyone else. No one knew any better, so then it's safe, right? Typically, the people that will say that the market is going to be going down or try to be contrarian are people like those posters from Motley Fool and many other smaller operations that aren't real, if you will, quote unquote real analysts, that their business model is to try to get clicks, try to get people to read their articles, and that's how they're making money, right? So obviously here, another thing that is important to keep in mind, since some people seem to say that the market is going to be crashing, some people seem to say that it's going to go up. Overall, again, Wall Street seems to be positive, but then obviously Goldman Sachs, quite prominent on Wall Street there, they're saying that while they are quite bullish, quite positive on the market for 2021, they are forecasting an actual rotation, a temporary rotation out of growth stocks and into value stocks. In other words, companies such as Tesla, companies Square, Shopify, all these companies that have a lot of potential growth ahead of them. Those are growth stocks, right? They have the potential to become even significantly larger than they already are. A lot of people say, well, you know what? The market has been, bonds don't pay much. The market has been all over the place. So a lot of people just went with the big tech companies because those were the ones that were performing well. And as a result, it sort of became, because, they actually were still making money when everyone else was in lockdown. And as a result, they went perhaps overvalued compared to what they should be valued at. So Goldman Sachs forecasts that now, as the real economy is starting to reopen, hopefully, in the second half of 2021 in earnest, at that point in time, people will start, taking or rolling back some of those winnings on Tesla and all the other tech companies and start investing back into more brick and mortar sort of things, or, Canadian Pacific, that was the example by the Motley Fool, right? So it's not so much that the market as a whole will be crashing, according to Goldman, but it's more of an issue that different sectors, especially the ones that have been high flying in 2020, might be less so in 2021. And again, that would make sense from a valuation point of view. So before, when I was showing you that valuation here, a lot of this is due to the fact that about 18% of the S&P is really covered by a handful of companies, and most of them tend to be very, very tech heavy, such as Microsoft, Apple, Amazon, Tesla, for instance. So, Tesla will be added shortly as well. And sorry. So, what is the takeaway then? So, best time to invest was yesterday. So you didn't invest back in March. You missed the run-up, or you didn't invest back in June. You missed the run-up that I just showed you. So what should you do? Well, the next best thing is the next best time to invest is, well, right now when you have the money. Now, obviously, the main question becomes, in what? So I just told you that probably some of the companies that have been overhyped and potentially overvalued might see a pullback, but no one knows when that pullback happens. Is it going to happen on January 1st or on June 30th? I don't know. No one knows, right? And to what extent? So again, then what should you specifically be investing in? So instead of giving you a list of exactly what you should be investing in, let's look at the main factors to consider. And some of them I already mentioned to you, right? So some valuations for some stocks are relatively high. That's a fact, right? But just because they're relatively high by historic norms, it doesn't necessarily mean that they'll be crashing, right? Because keep in mind, that price to earnings ratio, the PE ratio, sure, your price is high, right? But if you manage to pull off enough earnings, if you're also boosting your earnings substantially, then that price to earnings ratio will be dropping. You don't have to drop the price in order for the PE ratio to drop. All you have to do is just increase the earnings while at a faster pace or at the same pace as you're increasing the price. So I'm not saying buy or don't buy Tesla. I'm just saying it's likely to some extent overvalued. There's likely going to be a pullback. I have no clue, and no one has a clue when the pullback will happen or how much of a pullback there will be. And I'm just using Tesla as an example, but obviously there are many other tech stocks as well that have seen ridiculously high returns this year. Now, obviously, the massive dinosaur really is more than an elephant, I'd say, in the room is COVID and how we will be dealing with it going forward. We've seen already significant vaccine delays, right? The Trump administration had announced that by the end of 2020, they're going to be injecting 20 million Americans with the vaccine. Right now, the latest numbers, I think, was about 2.5 or thereabouts. So they've only done about 11-12% of what they expected to do. And even if they manage to figure out the logistics in Canada and elsewhere to distribute everything when they need it and where they need it, and then you still have to convince the population to take it. But on top of that, it's also, you have to look at the production capacity. It's great that you've pre-ordered, millions upon millions of doses. In Canada, for example, I believe is the country that has ordered the most vaccine doses combined between the various manufacturers per capita of any country in the world, right? So not all vaccines have been approved yet, number one. And number two, even once they get approved, you have to look at what is the production capacity of those companies. Because there's a physical limit of how many vials you can create per minute, per second, per hour, per whatever metric you want to use, and how quickly you can get it from point A to point B. So let's assume you get the point A to point B shipping figured out, no problem, everything is smooth, and everyone gets it everywhere, right? You still have that production capacity limit of those companies. And that's why right now in the US, and I believe in Germany as well, they're building expansions, or in some cases, whole new factories to build more capacity, right? So just because you've ordered 50 million vials and you really only need 20, doesn't mean you'll get all those 50 million, in a week from now or in a month from now. In certain cases, it might actually take until the end of 2021 to get what was ordered, even for the vaccines that were approved already, right? Just because there's such a massive global need for it, right? So because of that, depending on all those factors, economies might not be able to reopen as quickly as some might hope. So how quickly this will pan out is anyone's guess, right? And obviously, I'm sure all of you have heard of the UK and the South Africa new strains, new variants of it. Those will not be the only mutations. Viruses mutate on an ongoing basis. The reason you don't hear about most mutations is because most of those mutations are just random, right? All of them are actually randomly occurring. It's not as if the virus is sitting in a corner being like, haha, let's figure out a way to be more infectious. No, it just randomly mutates, it randomly changes. The mutations that make it less transmissible, those are not the ones that propagate, because guess what? If it's something that mutates that would actually be a great thing for us, that it becomes less contagious, well, then that variant of it, that strain of it dies out with that person that caught it, and then they got better. They didn't pass it to anyone because that strain was no longer contagious, or was a lot less contagious. So it's typically the more it's survival of the fittest, really, the worst strains that perpetuate. So far, it seems that both at least preliminary data, both of the UK and the South Africa variants should not have impacted, or should not be able to resist the vaccine. So the vaccine should still be perfectly capable of dealing with those two. Now, important thing to keep in mind, the vaccine is not necessarily, again, depending on what you're getting, they're going to be using different companies use different technologies. So different vaccines are effective to different extents, but also some might actually be an annual thing, right? So depending on how quickly we're able to distribute and create the vaccine and produce the vaccine and distribute it globally, we might be stuck having to take this vaccine, or one version of that vaccine, maybe for a couple of years until we're able to eradicate it globally. Because if it keeps on mutating and the first vaccine is no longer effective, or some of the vaccines that are more easily storable might only grant immunity for a few months instead of lifetime. As a result, you need boosters, and right now we're having issues with the production. So again, I'm not trying to be a downer here as an end of year, but again, if you're looking at it, the investment horizon, this will have a massive impact how quickly you can reopen the economy safely, right? For how long lockdowns last. and the longer lockdowns last, unfortunately, the less well certain parts of the economy will be doing, right? Good luck convincing people or allowing people to travel internationally and go to all the massive hotel chains worldwide and use cruise ships to the same extent that we're using in 2018 and 2019 in 2021 if we don't figure out a way to create these vaccines and distribute them fast enough before the virus has time to mutate sufficiently that the original vaccine is no longer effective. Now, on a happy note or on a positive note here is, now that the technology has been around, now that we already know a lot more about the vaccine itself, even potentially, I would say, more mutated strains that the current vaccines would no longer be able to recognize and as a result would be ineffective against. The good news is, hopefully we don't get that, but if we do get those, because of the supply chain, the way it was set up, because we already know so much about COVID-19, whatever COVID-21 or whatever on earth the new variant, if there's ever a variant that is different enough that needs a new name for it, we should be able to develop a vaccine in a matter of weeks at that point for that one and start trials pretty much right away. So that's the good news. But so we'll see, right? Now, obviously this, as I said, this kind of produces a lot of economic hardship of these lockdowns. And that's an important thing to keep in mind. And the reason I'm saying this is incredibly important, because if you're going on YouTube or if you're Googling what sectors are going to, recover fastest and whatnot, it's anyone's guess, right? So because of that, if you're trying to buy into individual sectors or even individual stocks for individual companies, sure, look at it whether they're overvalued or not, but also be aware that depending on to what extent the economy is opened or closed up, your guess of how quickly that stock will recover will be substantially affected by that. And as a matter of fact, if we find out that there's, the vaccines are not as effective as we were hoping, or it takes a lot longer to get it to people, because again, just because think about it, pre-ordering a video game, just because you pre-ordered or pre-ordering a PS5, just because you pre-ordered it months and months ago, doesn't mean that as soon as it's available, you're going to be able to get your copy, right? Same with the vaccine. With a lot more life-changing consequences, unfortunately. And then obviously, don't underestimate the impact that Trump will continue potentially to have on the U.S. political system and the economy, and the U.S. economy in general. So one thing to watch out for is obviously what happens on January 5th, because technically speaking, you might have a few senators or a few Republican congressmen and women that might try to invalidate or kind of object to the electoral result. Hopefully that doesn't happen. Again, I don't think that should have a massive impact, but you might see a small blip, theoretically, in the markets there. But again, Trump and Twitter are very hard to separate. So even though he may no longer be the president starting January 20th, I'd highly doubt that he would just fade into the darkness and never say anything about politics again. So there's a high chance that whenever Biden's going to be trying to bring, as he said, he's trying to bring Republicans and Democrats together. Whenever he's going to be trying to proposing certain restrictions or certain lockdowns, I guarantee you that Trump will have something to say about it. Now, to what extent and to what extreme he's going to go with it, it's anyone's guess. And at that point, technically speaking, he's just a public citizen. But just because he's a citizen doesn't mean that a lot of the cult-like following that he's gathered over the years won't listen or won't be inclined to listen to him. And the problem is, again, as I was outlining back here, the more you delay with the vaccines, whether because people don't want to get it because they've been convinced by others, Trump, that it's a nonsensical or dangerous or what have you. Initially, now again he's kind of changed his tune, or just the sheer fact that whatever might happen, you don't know with the new strains. You're that much more. You're delaying the recovery that much more, right? And that's a significant thing to keep in mind, unfortunately. So I hope Trump won't be a factor, but I'd be surprised that Trump won't play at least some role in the way that things move, at least in 2021, forward, even once he's no longer president. Now, very important. Markets correct by 10%, at least 10%, at least once a year, right? That's what history has shown us. This is what tends to happen. These are just historical averages. Does it mean that we're going to see a 10% correction in 2021? It's not guaranteed. It's just, again, that's the average. That means 1 year might have 3 corrections and you might not have anything for the next 2 years, right? Or you might have 2 years in 2021 and then nothing in 2022 and 3 of them in 2023. I don't know. No one knows, right? So, but that's just an important thing to keep in mind. So again, invest with a long time horizon, not just with, well, I'm going to be buying something and I'm going to hold on to this for next 3 days. That's called trading and that's speculative. If you're okay with that level of risk, go for it. Have fun, right? It's just, if you're a long-term investor, you're trying to, you have your own real life to live, and just the investing bit is you're trying to actually get some sort of return because, savings accounts pay you pretty much nothing these days. Probably a balanced and diversified portfolio is the right thing for you. All right. So in conclusion, some of the points that I have on this slide are pretty much the exact same ones that I had last week, just because they're still true this week as they were to the same extent they were last week. So understand your risk tolerance. So this is I believe the last or before last link in the description down below. So this, and you can find many of these questionnaires. This is just the example from Vanguard. And it's just about figuring out your risk tolerance, right? So yes, you should basically invest when you have the money and you're able to stay invested for at least ideally at least 5 years. You have at least 3 months worth of emergency savings, because I have no clue what 2021 will bring. I really, really, really hope it's going to be a much better year. And statistically speaking, it's probably going to be a much better year than 2020. So 2021, I'm hoping, that it's going to be a better year. But just because you don't know when you might have a correction for some of those overvalued stocks, when cryptocurrencies might dip before they go back up again, if they do, depending on which ones, figure out what is your tolerance for risk, right? So this is a very, very straightforward questionnaire. I highly advise that you have a look at it. It's 11 multiple choice questions and asks you about, when do you need the money for, et cetera, et cetera, et cetera. And then it'll try to tell you, it'll determine, what would be your optimal risk reward tolerance and basically your overall tolerance for risk. I'm just going to be randomly clicking on things. So this might be a really weird outcome at the end. I'm literally just randomly clicking. I'm not reading these, as you can see. Just let's see. Okay. So in this case, it actually came out to a very, very conservative portfolio, just because by randomly clicking, I selected something that was very, very much, I probably clicked on needing the money right away or what have you. But yeah, so you'll get something like this. And by the way, whenever you're filling this out, try to be in kind of a neutral mood, not in a overly pessimistic or overly positive mood. And so yeah, so figure out your risk tolerance and then stick to the basics. Again, have a plan and then just work with it. And if you're interested in seeing exactly how that works and how to rebalance, I already mentioned, I believe last Thursday, that starting on the first Wednesday in the late afternoon, early evenings, I'll be posting a video telling you exactly what I'll be starting a small portfolio from scratch, right? So I'll be starting it with $1,000 and then I'll be adding $100 every single week. Okay, so I'll be on Questrade. I'll have a bunch of videos explaining that coming up the next couple of days, and then you can just literally see what I'm doing. I'm not saying to exactly copy me, but just in case you're interested in seeing how one would, like, what the theory behind rebalancing is, and you can pick your own ETFs, right? I'll just be using a certain number of ETFs. Again, I'm not a licensed advisor, but so I'll just show you, right? So then you can use the exact same approach that I am. Whether you're using the same ETFs, some of them, some other ones, you're using individual stocks, but just to see exactly how you would go about to invest on an ongoing basis and on a weekly basis. Again, this is, as I said before, balanced and diversified portfolio works, and understand the difference between speculating, investing, and saving, right? So that's the whole point of risk tolerance. And yeah, if you need to speculate, 5 to 10%. So if you want to buy individual high-flying stocks or some crypto, even for some people, don't do it with more than 5 to 10% of your portfolio. You're just gambling, and sure, it might pan out great, but the converse is also true. You might end up losing everything, unfortunately. So that's pretty much all I wanted to tell you today. And as I said, I'll have a short little video. And by the way, initially I was also going to be talking about what are the optimal days of the week and times of day when you should be investing. You can Google it for yourself if you want. Or again, I've been editing like a bunch of videos lately. So I'll be posting. I'm not sure exactly when I'll be posting it, but over the next few days, there will be a few of them. So maybe check that one out if you're interested. Let's see. Any questions in the chat? I think I don't see anything. All right. So in that case, so Happy New Year, everyone. I hope this was somewhat useful, at least. And yeah, feel free to leave any questions in the comments down below. And as always, have a great day.